Welcome back to our channel, where we help you navigate the investment landscape. In today's video, we'll be discussing strategies to grow your investment portfolio during these challenging times. With the current economic climate, it's crucial to adapt your investment strategy to mitigate potential risks. One effective approach is diversification, spreading your investments across different asset classes to reduce overall risk. Consider allocating a portion of your portfolio to stable investments, such as low-risk bonds or blue-chip stocks. Another strategy is to take advantage of market volatility by buying quality stocks at discounted prices. Research and identify companies with strong fundamentals that have the potential for long-term growth. Investing in index funds can provide broad exposure to the market and minimize the risk associated with individual stocks. When considering new investments, thoroughly analyze the financials and performance history of the companies you're interested in. It's essential to stay informed about current market trends by regularly reading financial news and reports. Maintaining a long-term perspective is key during tough times. Avoid making impulsive decisions based on short-term market fluctuations. Consider setting clear investment goals and reevaluate them periodically to ensure they align with your financial objectives. Seek professional advice if needed. A financial advisor can help you create a tailored investment strategy based on your circumstances. Remember the golden rule of investing: never put all your eggs in one basket. Diversification is key. A well-diversified portfolio can protect against substantial losses if one investment performs poorly. Don't overlook the importance of a strong risk management strategy. Set stop-loss orders to limit potential losses. Consider investing in defensive sectors, such as healthcare or utilities, which tend to be less affected by economic downturns. Investing in real estate or REITs can provide stable income streams, especially during periods of uncertainty. If you have a longer investment horizon, consider allocating a portion of your portfolio to higher risk, higher reward assets. When considering international investments, be mindful of currency risks and keep an eye on geopolitical developments. Staying disciplined during tough times can help you avoid emotional decision-making and stay focused on your long-term goals. Regularly review your investment portfolio and make adjustments if necessary to ensure it remains aligned with your risk tolerance. Consider taking advantage of tax-efficient investment accounts, such as IRAs or 401(k)s, to maximize your long-term returns. Avoid timing the market. Instead, focus on consistent investments over time to benefit from dollar-cost averaging. In times of uncertainty, some investors choose to increase their cash position to have liquidity for new opportunities. Maintain a well-rounded perspective by seeking alternative investments, such as commodities or private equity. Remember to remain patient and not get discouraged by short-term market fluctuations. Investments take time to grow. Review your portfolio's performance periodically and make necessary adjustments to ensure it remains on track. Take advantage of technology by using investment apps and online platforms to easily manage and monitor your portfolio. Don't hesitate to reach out to fellow investors, join discussion groups, or even seek mentorship from experienced individuals. By staying proactive and adapting your strategy, you can grow your investment portfolio even during challenging times. As always, make sure to do thorough research and consult with a financial professional before making any investment decisions. Remember, investments come with risks, so it's important to proceed with caution and make informed choices. Thank you for watching, and we'll see you in the next video.